Monday time, final hour, just after 3 p.m., April 21st. Hope you all had a fantastic holiday weekend. Thought it'd be nice to get a little bit of a break with no markets open on Friday and come into Sunday. It's like nothing ever stopped. Nothing really de-escalated. Back to the same old thing. I saw that Trump was pretty vocal over the weekend, saying that everything is great, prices are down, inflation doesn't exist. Powell and the Fed should be cutting rates. Unfortunately, I don't see the data that supports that. I know that inflation is not gone. I know there's lagging data. I know there's real time versus what the Fed looks at between CPI, headline core, super core, PPI, core PCE, so on and so forth. The Fed is likely going to continue to hold firm until they absolutely have to, which looks like they're going to still be cutting rates 3 to 4 times this year, starting in June. So anyway, I don't love how Trump is now, kind of taking a victory lap, that everything's going well with these negotiations. The market is treating it not like that at all. We are down 3+% in the S&P today, another gap lower. Technically we came right down to this previous level. I posted this in my Telegram. I talked about this last week. I look at it this way. If this is a swing from low to high right here, so we go from swing low to swing high, okay? There are 2 levels I'd be watching. This level that we are at today and the full-on pullback of the Wednesday breakout that happened with the tweet, we have a 90-day pause in tariffs, okay? Because this is a 13.3% area from this low to high, there's a lot of intraday noise that the market is still going to navigate. From a technical perspective, if this is going to be a wave up and a correction, we could have a flat pattern that still catches a bid going through the rest of this week. It doesn't have to be crazy complicated. Because the inefficiency, in my opinion, was on this Wednesday candle, it's not a huge surprise that Thursday we almost immediately came back and tested the entire thing, but then proceeded to head back up to the highs, and we are now down to the lows again with a gap created from today's open. So big levels to watch. I think as long as there's no major damage done at the lows, I'm still kind of holding firm that this market is kind of in no man's land. But still, as long as we don't break below the lows at 48, and when I say break, I mean like break and just dump to the downside. I think on the weekly time frames, you can see here, we have strong level support. It was previous resistance in the 2021 highs, 2022 highs. That would have been January 2022 in the S&P, November 2021 in the Nasdaq. And we also have a weekly 200 moving average as well as the 5-period yearly moving average, which is acted for a multi-year support line for the bull trend. Okay, so if we do come back down to test those lows, I think it's a test. I think it's a potential bear trap. I think if the market is not going to break in 2025, that a bear trap is likely going to be the play. So, it's hard to say that everything's going to be great at the bottoms again. It's certainly not going to feel like it. But if we do come back down to retest these lows, I'm going to take some stabs at buying some dips. I could see this noisy area playing out with a couple of opportunities to, trade, grab some near-term profits, de-risk, de-leverage, and repeat and rinse and repeat until this is done. If this is going to be something where it stabs a little bit lower and then pulls back and then stabs a little bit lower and then pulls back, I mean, we could be doing this for a while until the market finds a way to, round out a bottom, wherever that is. Maybe it's a falling wedge. The longer we go sideways, okay, the more vulnerable I think this break below 4,800 gets. So I'm hoping that we either have a Wednesday swing, pull back, retest those lows, and we can retest the highs again. So that'd be, prices this week end up churning higher. I am surprised getting through the April expiration. We're starting off on a bit of a rough foot today, but going into this next option cycle from April to May, I do wonder with earnings season this week, we have a pretty decent amount of earnings. I want to say, let's look at how many, let's go stock twits. Let's see how many earnings prints we have this week. I think we're in the hundreds. Yeah, we've got like 300 or 400 companies reporting earnings this week. So today, I priced out 11 different stocks today, and I took one, really wanted to take a second one. I'll talk to you about it today. I was looking at Intel to price in something on Intel for a 1-day expiration. I might revisit the trade just because the premium is decent enough, but I'll take a look at it. But we have earnings this week, including some notables. You have Tesla this week. You have T-Mobile this week. You have Verizon this week. You have, I think, Google this week. So let's go to 33, 64, 128, 171, and 26. You have 422 companies reporting earnings this week. Some of the notables include right here: Verizon, GE Aerospace, Lockheed Martin, RTX, Tesla, Boeing, AT&T, O'Reilly Auto Parts. I've been watching that one for a while. That's one of the few, little brick and mortar retail shops that's up like $1,300. Was up to 14 and change. Alaska Airlines, American Airlines, IBM, Legacy Tech that actually has AI in the mix now. Chipotle, kind of fast food. Las Vegas Sands, some major lows there. That's a good indication. Like, tourism in Vegas is a good indication of how the overall consumer is doing in the United States. I have some puts on LVS, so I already have some exposure, but we're trading in the low 30s, and I believe my puts start at like 32.50. We might be trading at like $30. I said American Airlines, Copper, Freeport, McMoran, that's FCX, Southwest Airlines, Merck, PepsiCo, Coca-Cola, PepsiCo, completely divergent. Coca-Cola sitting near highs. PepsiCo has been down 10, 15, 20%. More expensive, which is interesting. I actually have shares of Coca-Cola, not Pepsi, but earnings this week. Valero for energy, Union Pacific, railroads, Intel, Google is Thursday after close. I think it's next week we see more Mag 7s. I think we're going to have, trying to think what next week is. Let me check this calendar really quickly. So let's go to next week. So getting us to the end of the month. Let's go into Wednesday. And usually they come after market for the big ones. It's Tuesday to Thursday is typically the big one. You can see there's a big chunk of earnings next week. Probably close to 1,000 stocks reporting next week. 62, 158, 211, 230, and 697. Yeah, we have 1,300 companies reporting next week. So big earnings next week to get through the rest of the month. Looking for some after bell. There we go. After bell. I guess I'm looking for Mag 7. Well, I'll just look at this. How about we just go to Mag 7 stocks like Apple? Okay, earnings on May 1st. That's Thursday next week. Amazon, earnings on Thursday next week. Broadcom, earnings have been pushed out to June. They had earnings a little bit earlier. Broadcom had earnings early March. Google has earnings this week on Thursday. Meta, earnings next week. Microsoft, earnings next week. Netflix had earnings last week on Friday. I've got a trade on this one to see if we get above 1045 or we get back below 920, actually 915. NVIDIA. NVIDIA is the 28th, which is going to be next week. I'm sorry, May 28th. That's out another month. Tesla earnings tomorrow. So I have some shares of Tesla. This will be an interesting next couple of weeks with Tesla. So I repaired the stock from a March expiration and assignment for about $7,000, and I'm looking to do the same thing, but with earnings coming up. I just did a long put at 150, which is out of the money, but if we have a kind of a knee-jerk reaction, there could be about a $20 to $30 move. That's based on expected earnings in Tesla, and if that pushes to the downside, then fine. Pushes downside, no big deal. If it pushes the upside, if Tesla has a surprise beat on earnings, then I don't have anything capped to the upside. My break even is around 252 right now because I paid for the debit with the 150 puts. So I bought more puts than I have shares. Like as far as I own 100 shares, but I think I bought 3 contracts for the long put. Let me double check that here. Tesla bought 3 contracts for $1.60. So max risk of about $480. Is that right? 161 times 3. Yep, $483 is my max risk. That increases my cost basis by about $4.83. But I have some protection to the downside if I need it. I have, hopefully if we go up into the 260s, 265s, if we have a big surprise to the upside, then it's uncapped and I can, either one, add a quick in the money covered call to repair it, or two, just dump the puts, take the close, and get the stock up a couple $1,000. So Tesla will be interesting to see what happens tomorrow after market. And then Berkshire, kind of responding with the S&P. We might be coming back down to revisit the 200 moving average. Here's the daily chart. So a lot of volatility here, right? Berkshire sold off to the 200, rips all the way back to the highs, fails at the highs, and just going sideways for right now. Bonds have been interesting today. Short-term bonds are up. Longer-term bonds are down. So the 20-year bonds weaker. That means that your 10-year, 20-year yields are up. This is not fun. I mean, again, this is the difference between Trump and Powell, the markets. It's not all working out the way it should be correlating. Typically, when you see the Fed looking to cut rates, the market kind of runs with that. The bonds, especially when the market is down, stocks are down, bonds are not up. So your short-term bonds, yes. Your long-term bonds, no. I mean, TLT is back down to the Trump put on the 9th when everything started to rip and kind of bottom out there. So I don't know how much more vocal Trump is going to get without just full in waving the white flag and saying, look, we're going to do this and our tariffs, we're going to blah, blah. I don't know. I don't know what it is. It's it's out of our hands. Just don't trade like an idiot. And I think if we can wait this out and survive this, then we'll get all the signs. Like we'll get all the signs that the coast is clear. You can see how excited the market was on February or April 9th when it was like, well, that's a uniform buy signal. But I'm not going to sit around waiting for Trump to tweet or post something on Truth Social and follow the free market based on a president posting a message. So, especially when I see him jawboning the entire global economy. It was I want to say it was even as simple as this morning. Might have been this. So, ramped up his attacks on Federal Reserve Chair Jerome Powell, prompting investors to worry that the central bank's independence, even as they grapple the effects of Trump's ongoing erratic trade war. Mag 7 is down. That's another kind of interesting group of stocks I'm wanting to watch. If the S&P closes at 20% or below its June 19th record closing high, they'll confirm the index entered bear market on that date. Bellwether index 17%. Escalated criticism. I mean, again, like this language is ridiculous. Mr. Too Late, a major loser, lowers interest rates. Now it's like, look, dude, the Fed lowered rates by 100 basis points last year, and the yields did the exact opposite thing. Right? You want to check a real price to see what damage is being done right now. Look at the U.S. 10-year yield after Liberation Day. This is when Trump declared victory. Hey, look, we got this figured out. We're going to go 90 days. Everyone's going to line up behind the U.S. and negotiate. Well, what's happening with yields? The exact opposite. They're up, right? The Fed hasn't cut rates. The Fed hasn't done anything, right? This is inflationary. This is making things. This is making the air pocket, the refi air pocket from July to December, way more costly. This is more costly for the Fed, for the government. This is more costly for anybody looking to borrow out 5, 10, 15, 20, 30 years. This sucks. So I don't know how this gets better unless the markets are down. And the crappy part is the markets are down. The markets are revisiting. They're pretty much taking away all of Wednesday's move from April 9th, and yet yields are higher. So you can't jawbone this stuff, man. I mean, this is up 30 basis points since Liberation Day, which obviously threw the entire market into a whirlwind. And now we look like the bond market is broken. Long-term bonds are down. So what may be the play here is bond yields might become more attractive to entice buyers. Like if we're gonna see foreigners pile into U.S. debt, it's probably not going to be at 3.8%. It's going to be at maybe 4.5. It's going to be at 5%. If you want to get commitments and say, look, invest in the U.S. Well, our yields are more attractive at 5% than they are at 3.6. And that's a huge concern because in the U.S. that's going to make things way worse. So anyway, not easy. Okay, Raheel, I see your comment there for New Zealand dollar. Look, anything on the dollar. So you can just go dollar index. Dollar index is down to some fresh lows today. Here are my thoughts. Dollar index is oversold. Okay. If you are anything with the dollar as far as benefiting from dollar weakness, if it was my trade, I'm moving stop losses and I'm trailing for profit. If this wants to get worse and worse and worse, keep trailing, keep moving stops, keep protecting profits. From a technical perspective, this is oversold. We do have divergence on the higher time frames. I've measured out this yellow boxes to symmetry around 96.30. So I put a box here between 9600, 9650. I could see a bottom happening in the DXY. So if this does happen, where we get a bottom in the dollar, Aussie dollar retreats a little bit, New Zealand dollar retreats a little bit, dollar CAD possibly pops up, euro dollar retreats, pound dollar retreats. A lot of these trades have been running hard against the dollar. So I wouldn't be surprised, like within probably a couple weeks, we're going to find a low in the dollar, at least in the short term. There's tons of past support right in here that could obviously offer up some resistance. So if the market is going to, find a low, find a retracement, as long as the dollar remains on the left-hand side of this trend line, it's still a sell structure, but there could be a near-term bounce on the dollar. So I think you've had a pretty nice run on dollar pairs. I don't know if it continues to get worse and worse and worse. Another comparison with the dollar is watch gold. Everyone is celebrating gold at all-time highs today, which it is. We're at 34.28. Gold's up over 3%. And I've talked about gold a lot the last couple of months. Technically, there is a huge correction at hand. It just hasn't given us any sign to correct. Gold is behaving much like a strong safe haven. Gold is behaving like an anti-dollar play. Gold is behaving like the hedge and one of the more popular assets to hold when there's uncertainty. So there you go. I mean, gold could be a bubble that breaks. And I don't know when the top is of the bubble. Nobody does. But I did go back to 2009 to 2011 when we had a very long bar count where gold continued to run higher, run higher, run higher. And we had over 670 bars, I believe, from a 2-year stretch until it finally corrected about 30%. So if we stretch all the way up here, that would be about a 30% move from this last dip where it capitulates higher and then crashes. And, look, I'm long gold, I'm long silver, I'm long ETFs that are exposed to gold and silver. I'm long Bitcoin. I'm long the Japanese yen. And if gold is going to continue to run hot, I'm going to start moving stop losses as we get closer to this. I mean, if we get closer to 37, 3,800, I'm going to be putting stop losses in my broker platform to trail this thing. Okay, if it gets ridiculous, who knows? But this level, if you put this on your chart, it's a 200 period moving average. I believe that this year, gold is going to hit it. And it's the way it's pricing out right now, it could be like a crazy bubble pop crash in order to hit this 200 moving average. A little bit more normal would be that gold pauses and starts to retrace. And maybe more normal, but that we're not dealing with normal circumstances. We're not dealing with normal price action. Correlations are breaking left and right. So for those that are long gold, I think it's great to be long gold, holding long gold, moving stop losses, and looking to protect a nice chunk of profit that might continue to grow. But once we are up into some bubbly territory, I'm not trying to be a hero here. I think trailing stop losses would be your best friend because eventually, if we turn, we're going to turn really hard, and that could be also a break in the dollar. That could be a flash crash in currencies in the dollar, which I've never seen. I've never seen a flash crash in the dollar index. We've had flash crashes literally in almost every other currency pair, and I've traded through them. I've traded through Aussie, New Zealand, pound, euro, Swiss, Japanese yen. I've traded through all sorts of flash crashes in 15 years, 18 years actually, since 2007. But I've never seen one in the dollar. So is this a year? Maybe. Who the heck knows? But as the dollar continues to plummet, if it continues to drop, gold's probably going to continue to stay bid. So don't fight the trend. If you're looking to buy gold, I hate it. I hate buying gold right now. Because if you're buying, I don't want to be a bag holder at the top. I don't want to buy this with a potential 20% correction coming. So, a dip or a pullback, maybe. I still hate that trade. I'd almost rather, protect, or just trade really small. If you start here and it pulls back, trade 2, trade 3, trade 4 and just scale in a nice big area and see if gold continues to run and stay bid. Meanwhile, silver looks a little bit better to me technically, which is why I still have the exposure. We're not above these recent highs on silver. It'd be awesome to see if we could get above these highs in silver. And the nice thing about silver, in my opinion, technically, is that we have been to these highs in the past, which is a nice way to measure. This is back in 2000. I'm sorry, this is back in 2011, and this is back in 1980. So has silver been as high as $48 to $49? Yes, it's been there twice in history. So I would love to see silver have a similar follow through. Let's get to a 2011 high and have this thing go up another 30-40%. Right now we're looking at maybe 47 to 50% upside to revisit some of these all-time highs. That gets me a little bit more excited to think that silver can have that type of upside without having to hope that, gold, which is crazy overextended on a weekly time frame. Technicals are all overbought. It's tough to justify, but it's a good trade to be in. I've been in this breakout since 2022 and 2023. I've been holding gold now for a couple of years. It's been a great diversifier. Bitcoin is starting to look pretty nice as well, considering there is risk off trading in the markets. We have 70+% of stocks in the U.S. down today, and Bitcoin is still catching a bit of a bid, which is kind of nice. So I talked about this a lot this morning. I wonder if Bitcoin, number one, it's pretty well supported technically around $74,000. If this is also starting to show signs of an anti-dollar play, then it's starting to break away from what I thought was going to be like risk on, risk off trading. Again, we've seen this for a very close correlation between Bitcoin and the Nasdaq. The Nasdaq's down over 20% from peak to trough, right? We had a 20% correction from the recent highs in Nasdaq down to recent lows. It's bounced off those levels, but we're still down double digits for the year. And Bitcoin is kind of maintaining and containing a bit of a drawdown. So, about a 31% drawdown, but the Nasdaq was like 28%. So it's not that much more volatile. I mean, usually you'd think like, oh, if the Nasdaq's down 27%, Bitcoin's down 40, 50, 60%. Well, it wasn't the case this year, not yet. So anyway, point is, maintaining some good structure here. There's plenty of support. If the markets do get a little bit of a lift, I'd love to see Bitcoin also catch a bid back to these recent highs. Just be prepared for some more consolidation, similar to over here. A lot of consolidation before the next big catalyst. So hopefully we're having this conversation in the next maybe 3, 6, 9 months, and Bitcoin is back above 109 on its way to higher highs. Where does that put gold? The indexes, I don't know. But if as long as it stays above 74,000, I'm pretty optimistic that we're going to see good support, strong structure, and Bitcoin has a bull market setup. Okay, just making sure I don't miss a message here. All right, that's Bitcoin. So we did gold, silver, dollar, dollar index. I'll go back to currencies in a second there, Raheel. So New Zealand dollar, like I said, if you're long, that was a great trade. I took New Zealand dollar long, scaled into some of that noise around the 5,600 area. And the same thing on Aussie dollar. But oil, I think if you're lucky, oil stays in a range. I don't know what's going on here with oil. I was bearish on oil as we continue to bounce off the 200 moving average, and that worked out fine. I was also bullish on oil off of these support levels. So I've taken some bites. I've done okay on oil. I'm not doing anything right now. I'm just going to kind of wait this thing out. I wouldn't mind taking a trade right in here. If we come back up into some resistance and then reject, I wouldn't mind seeing a chance to short this again. Or the flip side of that trade would be we come back down and revisit the low from April 7th or 8th or 9th, whenever that rally was. I think that might have been the 9th. So that low was the 9th. Yeah, so the same day that the market ripped, that was an oil bottom. So if we come back down to the lows again, I wouldn't mind taking a stab at a directional trade back up. Define risk here, nothing crazy, and maybe a futures trade on CL. Okay, let's go FinViz, check the heat map on the day. It's probably pretty crappy. 81.4% of stocks declining today. Not good. I took a small loss in SPX this morning. I did get most of that money back today. Here's SPX as we near the final 30 minutes of trading today. SPX, a 30-cent debit was trading up to about $1.60, $1.70 today. So easy a triple digit return on a little butterfly spread. Traders in my morning session, I mentioned this 40 or the 5100 level getting hit today. So those are pretty cost effective trade for some profit. But again, not a good look. Little Netflix is green today. That's about it. Everything else is red. 81.4% of stocks in decline. Let's go to the heat map and go to the world, because the world's also bleeding a little bit too. This is a lot worse than what I looked at this morning. Taiwan semiconductors way down, Japan way down. We've seen a lot more stronger correlation between the Nikkei 225 and the U.S. markets. China's hanging in there with a little bit of green today, kind of mixed. But UK mostly red, Ireland mostly red, mostly Europe is red. SAP is a big one, down 3%. Canada sprinkled into some gold plays. That's about it, but not great. As they say, U.S. catches a cold, world catches the flu. For now. And I don't know if the world is actively looking to avoid that, but this stuff is not done. So I posted a video on TradingView. If you search for me on TradingView, my handle in TradingView is Chris Pulver with no space. And there's a bunch of trade ideas that I have, and I posted one. Let me see if I can find. I think it's just SPX key levels. And a big thanks to all the TradingView users that supported the idea. And I got an editor's pick for it. So a lot of new followers have come from that. But point is, I'm trying to find the video here. There's a lot of links. Ticker, there it is. So SPX 500 or S&P 500 key levels, April 17th, 11th, weekly candle structure. So the summary is this. We had such a disruptive candle the week of April 7th to the 11th. That's now 2 weeks ago, right? So this low to this high, price can just dance around in between there. So we can come all the way back down to these lows and fail. To me, that's a good opportunity to start looking at taking some bites and getting long again. Not aggressive, but just if you're right, I think the upside is pretty good for a 2 to 4 week window. If you're wrong, it's defined risk, and you continue to have some hedges that work to the downside. But that's an area that I'm watching. Now, I still think that this low and starting off on a Monday, it is weird to see a Monday move this much, but we did. And if this is a level that the market, kind of goes down, but then fights back all week, there could still be a gap fill by this week, and the market actually might finish green with the weekly candle. But it's still inside of this high to low. And that's my point, right? All of this can be noise and no real direction whatsoever. But that is a lot of volatility to price in, right? A lot of volatility. So it does make it challenging. Right now it's like we're kind of right in the middle. I'm curious going out like 50 to 60 days. And this might be a great trade. This might be a terrible trade. But let me price something out here. If I go out, let's say to the end of May, and from a timeline basis, I don't mind this trade, going out to the end of May. This would be May 30th. That's 39 days out. You can kind of get the sweet spot of premium decay. But if I did let's say Iron Condor, if I put in lows around 4,800, so let's go put side, I'll go 4,800. I'm curious how wide these are. These are 10 wide. Okay, so 48 by 47.90. So let's go 48, 47.90. So you get $2 on a 10 wide. That's not awesome. I wish it was more like $3. I'd like to get at least 30 wide. But that's a freaking 24 delta. I should be getting a lot more premium for that. So let me see what the risk profile looks like, because I don't think it's going to be that great. Here is 5,500, which we were just at. So let's go 55.10 to 20. So we get 445 on the trade risk and 555 max risk. It's not a bad setup. Okay. But the deltas are still really high. The premium IV rank is still quite high. I think a better trade would be like a 15 delta. So 55.90 is not bad. 5 or 10 wide, not bad. 10 wide's a little steep to go out that far. That's a 15 delta though. Let me see. Let me go to the put side. So put side. Wow, it's so far down there for a 15 delta put. the pricing skew is pretty impressive. So, and this also changes the look at this going down to like 46 to 45, 25. That's a 25 wide strike. So I'm going to go 46.10 by 46. So I get, $3 on the trade, 290 on the trade. I'm risking about $700. I mean, traders in my daily profit play sessions, we do this almost every single day for anywhere between like 230 and 250 we've gotten the last couple of weeks with the same risk profile that we get paid instant, like in the same day, as opposed to, hey, I'm going to place this trade out to May 30th. Now, granted, a May 30th expiration starts out, I mean, this has a 68% chance of profit, which is okay. I like it to be higher considering I'm doing a 15 delta. So I'm not going to take this trade. I want to price it out because we're kind of right in the middle of all this noise. But I think the better trade, in my opinion, would be something like this. I see your question there, OT, on the Discord. I'll post it before I'm done. Yep, I'll post it before I'm done. Okay, everyone, we give me 60 seconds. I'll be right back. Just stay put. I'm just going to let the screen marinate. Give me 60 seconds. Thanks. All right. Sorry about that little delay. Just had a visitor come by. So all good. Okay. I don't know where we left off. Probably talking about the lows. So if this is anywhere in no man's land, I think that right now, key level of support, or I'm sorry, key level of resistance right now, key level support, anything, any day, it doesn't matter. Pick your poison. Like I am day trading in here to kind of generate the income. It's been pretty darn good. We've had a nice run of trades on SPX the last couple of weeks that have all been winners. I took a small loss today just because I saw the 5100 level line up, and that trade was right here. So this morning, and it is back. I mean, we had levels. I think the 5150 and 5145 are my levels this morning. We're coming back close to it, but I told traders this morning I'm not willing to sit and ride this trade out all stinking day. I wouldn't be surprised if it did somehow pop back up here above 5150. Just given where the deltas were at. But I mean, we did have lows at 5103. I turned that little butterfly into like 150% winner, so I'll take that. That helped wash away some of the losses this morning. But I took a very small loss in the first 30, 40 minutes of trading this morning, as opposed to wondering like, is it going to go to 5100? Is it going to stay above 5150? So I just cut the loss. And here we are in the last 20 minutes, and if it goes up another 12 points, yippee skippy, you wait all stinking day, you take on $1,500 of risk to walk away with $50 profit. I took $110 loss this morning, and I made $150 in a butterfly spread. I'm net positive on the day, and a lot less stress. So anything in here, my point is this: we have heavy resistance, we have heavy support. Prices are a little nuts. Yields are up. Bond market's not behaving. Trump is jawboning. Fed's not doing anything. May's likely not going to be a rate cut. The yields are not pricing in good things. Yields are going higher. My biggest concern is that the Fed wants to start looking to cut rates, but they might not be able to. If yields are going higher, I don't know if that becomes an inflationary thing, or they just know that the bond market is going to price in something very different than the Fed, which has been a correlation of 40 years that's breaking. So in here in the middle, it's very, very messy. Picking a direction, I think, is silly. I'm not going to pick a direction. I will say this: if price comes down to these lows, right? If price comes down to these lows again, I think there's enough of a bear trap scenario that we could see the fake out and a bear trap that offers up some near-term relief. Perhaps it does the same thing over again here where we have another 10, 12, 13% rally, but instead of doing it in one day, it takes several days and the bulls just kind of climb and climb and climb and climb. Perhaps earnings is enough to start that cycle. So there is a lot of uncertainty with where things are going to go, right? But for right now, traders have to survive in this area. So I'm going to stick to short-term strategies. I'm going to trade relatively small, take my income stabs, and then position myself for. I've got hedges. If we come back and revisit lows, I'm taking hedges. I had some synthetics that worked out pretty nicely. I'm still looking at some of my hedges here. Up 134% in one hedge, up 100% in another hedge, up 111% in another hedge, up 31% in another hedge. Those can run. Those have big rewards to risks. They're there if I need them. And we will see ultimately what that ends up paying if needed. But if we end up taking some partial profits around the lows, that's okay. But I want to get directional off these lows. If the trade war de-escalates, then we're probably right back up to this level. If the trade war de-escalates even further, where things actually look like there's a solution, then I think this market can go to the upside, like everyone would be loving it. Okay, like it's the greatest thing ever. But we don't know. And until that coast is clear, I think it's silly to be really aggressive right now. I think having cash at the ready, having dry powder in order to buy into these really nice opportunities would be great. There are stocks that are offering up amazing discounts. The problem is if there's no direction, you can have a stock that just sits and does nothing for months, and that can be really aggravating. A case in point was I took a long on Intel and fortunately flipped it because it was long in here and Intel pops up a couple of bucks on a new CEO announcement. Shortly after, it dumps, right? Pops back up and dumps. So, I mean, this isn't a bad spot to get started, but I'm going to look at Intel, and we have earnings on Intel for Thursday the 24th. Yep, Thursday the 24th aftermarket. So I may price in an earnings play if the IV is still high. I might price in an earnings play on Thursday with a trade that hopefully keeps it within the expected move within a 1-day period. And going into Friday's trading, as long as it's not some ridiculous up or down move on Intel where it has a 2 to 3 standard deviation move, it should be a pretty easy trade to make some profit. I tried to put the trade in earlier today and I didn't get filled. I was looking at like a 205 credit, went down to 204, 203, 202. I wasn't getting filled, and that was below the mid price. So it's a little bit less liquid than I wanted it to be. So I canceled the trade. I thought I'd revisit it on Friday. Earnings is Thursday after market, so I'll revisit it on like Wednesday afternoon and Thursday during the day. Okay, give me a second. All right, so that's Intel. I did put in a couple of trades this week. So Newsbreakers, my service has a Tesla trade. We're still looking at a Netflix trade for a couple weeks out. My double up alerts put in a new trade today on Verizon, ticker's VZ. We have a trade on the SPY out to this Friday, which is not looking great. That was taken at the first kind of dump to the downside. It's inexpensive. It was offering like 130, 140% reward to risk, but not quite there. So we'll see. It's not looking good for a 425 expiration. But hopefully Verizon pays, and as long as the winners are bigger, then that's all I need for that service. Newsbreakers looks pretty good. Daily Profit Light took 2 small losses today. I need to actually add those in. So above and above 837, 838, 421, 421. I know we got into one for 235 and one for 230. $3 and $2.70 or $2.80. Let me double check that this morning. SPX, $3 and $2.80. Yep, so small losses there. All right, getting those caught up. Okay, we did oil, we did gold, we did silver, we did Bitcoin, mags. Kind of interested in mags if we have another double bottom type play where it comes down to like 39.34. We got some mag 7 this week and next week. Overall, I think mag 7 could help stabilize the broader market. Earnings are going to be relatively decent. I would think they would be, but guidance will be everything. How much of mag 7 earnings and forward guidance is going to be tariff? How much of an uncertainty? How much are they scrambling to adjust their business models to not be affected by tariffs? I don't know. So it could be tariffs take kind of front and center. Earnings and fundamentals, do they beat revenue? Do they beat EPS? Maybe it doesn't matter. It's like there's really nowhere to hide when it's a risk on market, or I'm sorry, there's a risk off market. There's really nowhere to hide. Even bonds aren't acted as a safe haven. Your best trade right now is gold. So that doesn't feel good if that's the only way you can kind of hide out, or you're trading currencies, But anyway, Mag 7 coming the next couple of weeks. If they're stable, Tesla could be an encouraging one this week if it's not a terrible earnings report tomorrow after market. Tesla going to the upside could kind of put some fuel in the fire. Google on Thursday could help put some fuel in the fire. These are both big enough market caps. Tesla was over $1 trillion. Now it's $727 billion. That's a big dump in market cap. Google, Apple. Apple was 3.3, 3.4 at one point. They've given up almost $500 million in market cap. Amazon, over 2 trillion, and now they're down to 1.77. Nvidia was 3.2, 3.3 trillion. Now it's 2.35, almost $1 trillion in market cap. Just crazy how much this has changed. Let's get to currencies, and then I'll wrap it up. Let's go Aussie CAD. I'm still long Aussie CAD, looking to fill this pocket. Aussie Swiss, I'm looking for some bottoming formations. This is a bit of a repeat of what I did in my morning session. But Aussie Swiss, there's a really big pocket here for a couple days, and I'm looking to see, it may not be perfect, not right now. But if I can, confidently point out a bottoming pattern, I think that Aussie Swiss has the ability to get back up into this pocket. possibly a 1, 2, 3, 4, 5 wave move somewhere back in a previous structure. Maybe it's the 200 moving average. Maybe it spends time. Look over here. Maybe it spends time. Here is the 200 moving average, right? If we form a bottom and we get back to the 200 moving average, that's a decent spot to be de-risking. But if we break above it, I think we actually change from a sell zone to a buy zone, and there's more upside here. But it probably has to do with risk on and has to do with a gold correction. The Swiss naturally correlates with gold a little bit, and gold being as high as it is, the Swiss is being pretty resilient. So crazy stuff. But that's Aussie Swiss. But I'm still watching. I have some buy stop orders here that are not filled. And if I can confidently spot my bottoming formation, I will move this chunk lower. And I'll start looking at also some buy limit orders to the downside and kind of surround this trade both ways. Aussie yen. Yen pairs, no trades. Aussie New Zealand, I'm just going to scale into Aussie New Zealand. So if we come into, let's say, this level here, willing to buy some lows, willing to buy some lows, and willing to buy some lows, and just stick to the range trade. So if it's a 106 down to 1.00, I'm going to dollar cost average in probably every 2 to 300 pips, and then play it back to the 106 level, or even what's been a strong support resistance zone is 107 to 108. So if it comes down low enough, I'm going to watch this Aussie New Zealand for a chance to kind of load up. I've done this before. This has been a really good trade for a while. Loading up, taking profit, loading up, scaling in, taking profit. So this kind of whole area to me is, if I'm patient, I could get some levels to dollar cost average in. As I said on the dollar crosses, this is the last trade I took on Aussie dollar. I bought it down here at the 6,000 handle. So 6,000 handle, right at that low, took it all the way back up to the recent range highs. I'm out of the trade. If this continues to go higher, okay, fine. It's probably going without me. If it pulls back, because they're not technical coin, you got to trade yen with negative swap. You get charged to hold them every single day, dollars upon dollars for every money, mini lot, micro lot, standard lot you're in. And if you hold them for more than 2 to 4 weeks, it's like you give back so much profit on just paper cut losses, right? Every week that I hold a standard lot on the yen, I'm paying probably $50 to $100 a swap. It's like you have to make so many pips if you hold it for a month or 2 or 3 or 4, or you have to time it so well. If you scalp the yen, totally different story. You want to scalp high volatility, scalp the yen, it's great. But that's not my style in Forex trading. So that's why I don't love the yen pairs, because I don't like hanging on a negative swap and being charged for something when I can hold a stock and hold it forever and never pay more than $0 to get in the trade. I allocate capital to it, but I'm not paying anything on it. And, that's the crappy part about being negative swap in Forex. So yeah, it's easy. So what am I doing instead? I'm playing Japanese yen futures and I'm trading FXY as if I want to be in the long Japanese yen, but I'm just doing it so I don't get charged to do it. And also, they don't behave like a typical technical FX pair. When they go like bear flags, bear flags, bear flags, bull flags, bull flags, bull flags, and they don't offer the typical pullbacks that I like to see. They don't fill efficiencies until months and months down the road. So frustrating currency pair for me. But if you're scalping, sure, take it short term, a couple days at a time, a week at a time. There's opportunities, but I'd say trade what you see. Don't do anything silly, but just I think position trading on yens are very difficult. Okay. CAD. Here's CAD Swiss. Again, oversold conditions on a daily time frame with divergence. Actively watching to see if and when a bottom can hold. I'm not calling the bottom here at the lows, but kind of attracted to it. Once I start spotting some better technicals here, then my buy stop levels that we're looking to clear these highs that never did. All these buy stop levels, I will start scooting them lower and looking to see if I can spot, some type of bullish pattern, stack up some orders, trade this back up into some type of 3 to 5 wave move. So Aussie Swiss, CAD Swiss, Euro Swiss. This has been a labor of love for 2 years now, and I've gotten paid on one of these. Dollar Swiss has paid me really, really well the last year, but we're still sitting here like Swiss is just really strong. It is a safe haven. A lot of it is because of gold running the way that it is. It's also because there's been zero amounts of intervention by the Swiss National Bank, despite the positive swap. CAD Swiss is, I mean, I know the BOC's cut rates quite a bit. So cbrates.com. Canada's down to 2.75%, while the Swiss is at 0.25. You get a 2.5% kicker, but price is still down. I mean, we're down another 150 points from this recent support at 6,100. So I'm in a drawdown. I've got buy stop levels that I'm just going to scale into. I'm just waiting patiently. But if we can spot a low, I think there's a 3 to 5 wave move ahead. Again, you can see the 200 average. This could be an exit point, or this could be a spot where the sell zone finally exhausts itself, comes up and becomes a medium to long-term buy zone. And hopefully we have some pockets and efficiency levels that will get filled. I mean, who knows, man? This might take another 6 to 12 months to get these trades lined up and profitable the way that I want them to, but hopefully they all work out. Yen crosses, like I said, just be careful on yen crosses. CAD yen's down at some lows. Aussie yen poked the lows. Swiss yen, this is kind of a safe haven versus safe haven. I wouldn't trade Swiss yen. I think there's other better ones if you like the yen crosses. Euro Aussie, maybe a lower high to higher low, maybe a pullback into these recent highs, and then a sell off, maybe. Pretty volatile though. I don't know. I think the better trades right now. I mean, EuroCAD, if this one is going to be a sell stop level, I think this level could be a good sell stop to catch some movement back down to these lows. But definitely with defined risk. If this pair just runs bananas to the upside, I'm not calling the top here. So I want to see some better confirmation or alignment on the smaller time frame. And as I'm talking, look at what's happening on the SPX here for the final few minutes. We bounced off of 51.03. We're back up to 51.57 this morning. If I had anybody, and I'll ask them all tomorrow morning, if I had some courageous traders that held through the entire day, you're now getting some small profit this morning. I'll look at it right now. So this 280 that I got out of, it's trading for a 5 and 15 cent debit, and you're just above the put side. So you survived it, but what a silly little run that was. Took all freaking day to get that trade. So not fun. And just as I speak, Dean says I was able to close my iron counter this morning out for $25 profit. Yep, I told you, man. So after being down essentially the entire drawdown, right? So Dean was a courageous enough trader to hang on to it, and I'm glad, man, you got paid. So I opted for the kind of the easier path, which was, look, I'll take the hit, I'll take the paper cut for $110 today, and take a loss and move on. I made $150 on a butterfly spread, so I was net positive on the day. But yeah, I didn't want to sit on this thing. 5,100 was way too big on my gamma levels. It was way too obvious on my liquidity levels, and in case we got there, I didn't want to sit and do the exact same thing. Right? I would have been down about $1,500 to be up maybe 50 to $100 today. So isn't fun to have it all work out, but that's just a lot of annoying trading when I still finish up net positive within a couple of hours as opposed to waiting on all day. But nice work, Dean. Crazy stuff. Okay, Penny said stayed out. Okay, good. Baby 4 months old as of yesterday. Getting up there. Getting up there. He's so young. He's so little. Anyway, what else? Currencies. Let's go back to currencies. Euro CAD, Euro Swiss. Still watching Euro Swiss. These buy stop levels, I'll move these down. I want to see some more confidence that I have a bottoming pattern that I can trade. Right now we have a range from this kind of 9,200 to 9,600 zone. I wouldn't mind seeing something like this. If we go down again with some divergence, maybe spotting a bullish pattern here and then stacking some buy stops to see if we can get like a 3 to 5 wave move. It's just going to be patience. I think that's going to be the name of the game. All of this. Look, you want to get long stocks, be patient. You want to be long the indexes, be patient. You want to be trading something directional for the next 3 to 6 months, be patient. Okay. Nothing to me looks guaranteed. Nothing. Right? Because I've had friends that barely ever talk to me about anything like stock related, and all of a sudden they're interested because the market's down 20%. They're like, what do I do? Do I do anything? Should I put more money in? Do I sell? I'm like, number one, we're down 20%. It's a great discount. So for anybody that has like a 3, 5, 10-year horizon, you started at a 20% discount, probability is you're going to the highs again at some point, right? But at a 20% discount, it could also stretch to 30, 40, 50% discounts. And that is what I want everyone to be aware of. It's like, just because we had a low at 21% off the S&P all-time highs does not average out to be what a normal bear market is. A bear market is 30 to 35%, right? A crisis like we had back in the dot-com bubble and the great financial crisis were 50+% off the all-time highs. So all of that could be happening. It may not be this year. It might be next year. I don't know. But I don't want to think that the bottom is in at 20% when it could be another 10, 20, 30% lower. So longer term, sure, everything's on sale. You've got some good prices. Let it go. But you've got to have the patience to have a 2, 3, 5-year horizon, because right now you could be buying in and watching everything just get beat up and abused, and you're going to be in drawdowns and being red, and nothing looks good. But there will be opportunities. But I'm saying be patient. I think right now there are levels to watch. And if you're in a session like this, we're doing this stuff every single day. There's going to be opportunities where it's like, yeah, I'm going to take a stab here. And there's income opportunities. There's longer term position opportunities. But that's about it. So anyway, S&P closed at 5157. Look at that piece of crap. Right above our blue line, like we needed it to be. 5150 and 5145 today. Just like that. Just a last little hurrah for the final, literally the final hour rallied up 62 points. Was over 1%? Look at that. Up 1.21% in the final hour. Wild stuff, man. So anyway, tomorrow's a new day. I'll take the win on the day. I'll take net positive, that's for sure. And then we'll see. We got some good trades in Waterfall today. I like the earnings trades for newsbreakers. I like the double up. Let's see what happens. Discord, I see it. Just give me a second. Let me finish up. Let's go back to currencies. Euro pound, yen crosses. No, Euro New Zealand, be careful. Highly volatile. I can see a pullback and a push down. Okay, dollar crosses. Move your stop losses. Dollar is oversold. Euro dollar is overbought. Move your stop losses if you're long. Don't call the top. Okay. If you see confirmation on a smaller time frame, you can get short with a stop loss, but don't call this fundamentally driven move. Some of the wildest moves I've seen in the forex market are technically open space trades with fundamentals that are driving the move. And right now, the dollar has been fundamentally super weak, and doesn't look to be getting any better. So until that dollar pivots hard and causes a price action move in these dollar pairs, I would just be trailing stop losses and patiently waiting for, either one, your stop losses get activated to get out of the trade for profit, or two, you get the confirmations that you're looking for, right? Confirmations you're looking for to then take the trade you want. If you're looking to short your dollar, get it confirmed on a smaller time frame before you take the trade. Okay, pound Aussie. This one has come down pretty quickly. We could go high, low, lower high, lower low. So, perhaps it's consolidating in here. Shorter term, do I want to buy this thing? I don't know. We did just come off a pretty strong uptrend, so I could see, a little bit of a retracement here. I don't know if I'd love to buy that, but rather set this up for a trade where you can put in a swing trade, go after a 1.5 to 1 or 2 to 1. To me, that seems like a little bit smarter trade and a little bit less stressful than trying to go bullish and bearish all in the same swing. Quang, I posted that in my Discord. Look at my Discord channel. Look at free group chat. I posted that on 4/17 at 6:37 p.m. It's right here. And I didn't see any direct messages from you, so I don't know if you messaged the wrong real Chris Pulver or somebody else, but this is my free group chat for everybody. Yeah, look, it's right here. So you're in the chat. I thought you were going to send me risk management right here. Boom. There's my tear sheet. So take a look at it if you want. It's in the chat. Okay. All right. Speaking of that, for OT, I think was asking for my Discord. I'm going to make a link that's 30 minutes. It's good for 30 minutes. Okay. I'm trying to eliminate all the scammers and crap. When I put it on YouTube, it's like I get a bunch of bots and scammers, and it's annoying. So I'll put a link that's good for 30 minutes. So if you're in this live, cool. I get a lot of comments like, "Hey, can I get your Discord link?" Just join me live. Join me live and ask me live, and I'll post it live. That is a lot easier for me to kind of maintain quality control. All right. So let's go invite link for the next 30 minutes. New link is generated, and here is Chris Pulver Trading Discord. And I have a free Telegram channel as well if you'd like to join that. Oops. Telegram here. There you go. So Discord link and Telegram. Come in and say hi. All right. Pound CAD. EuroCAD looks to be set up for a slightly better trade. EuroCAD is sitting at these highs, but no sign of stopping yet. So I wouldn't just call the top on EuroCAD, but Pound CAD, kind of the same thing as like maybe this comes back to the highs around 87 to 8800 and then fades. Or, I mean, because this is pretty well supported, if we go, pull back on Pound CAD and then head back up to the highs, that actually would be a better reward to risk trade versus trying to call the top. Pound Swiss, I actually do like this trade. If anybody has the margin, if you're not in the US, maybe the margin's not as bad. If you have 200 to 1, this isn't really a problem, but a really good candle inefficiency rating here. So if I was long Pound CAD, I'd have to be prepared for like a 105, literally down to a 102, which is a lot of room. But I think the probability of hitting a 112, 113 is very high. So small, buy the low again, small, take a 104, 102 zone, maybe 3 to 4 trades. Obviously, if you scale in equal sizes, your break even is going to be somewhere in here if they're all filled, and then your upside potential is actually better reward than risk, which is why I like the trade. But margin wise, it's a bit pricey, at least for me. Like it's like 3 times the margin on Pound Swiss than it is for like Aussie Swiss, CAD Swiss. But I still like the price action. Pound Yen, probably scalper's paradise. Pound New Zealand, if it comes back down to the 200 moving average on the daily time frame, looking for a buy opportunity on the smaller time frames. Pound dollar, coming right back to these September 2024 highs. We're at 11 candles in a row to the upside. I wouldn't be surprised if this starts to pivot. Meaning like we're going to hit some resistance to start to sell off a little bit. New Zealand CAD, I'm long. I bought some New Zealand CAD down here around 8,000, and that's working out pretty nicely. New Zealand Swiss, I'm watching closely for a bottoming formation. I want to move some buy stops lower. My break even's down here towards around 48.50. So even getting back to like 5,000, I might just take the profit and move on. But this could also be a trade where this is a low. Let's say we swing here, 3, 4, 5. If I can measure a 5-wave move, there's plenty of upside here. But we have to get above these 200 moving averages first, or else these buy zones never look to be confirmed. New Zealand yen, New Zealand dollar. New Zealand dollar, I bought it at equal lows. That's worked out pretty nicely. I did close out right at the 200 moving average. So right in there, closed out. I'm not getting this extra jump above the structure. But if you're still long New Zealand dollar, it's working out really well. Just protect your profits, move your stop losses. Dollar CAD, behaving a little bit. Past resistance becoming support. Be careful. Personally, I'd rather, unless this forms like a really obvious buying pattern. I don't know if the dollar is going to continue to get weaker. Maybe oil jumps and spikes off the April 9th low, and if oil goes higher, then CAD gets stronger. But I'm not sure. I'm really not sure. So if this is a bottoming pattern, then maybe a swing trade lines up with a stop loss and swing it back into like 4,300, maybe swing it back up to 44, 4,500. But I was long. That was one of my better trades in a while on dollar CAD. It's been a tough one to trade for the last couple of years. Other than a range, is like I got filled on that range, took some profit. Range, got some profit. Range, got some profit. Range here, I had to wait a lot longer, took some profit, and I was waiting to buy the lows, and I never got the buy trade. So I started a dollar cost average in, but for as long as this was almost a 2-year range, I had like 3 or 4 winning trades. So good structure, but it is what it is. I just worked out to be long in here all the way up to that 145 handle. I saw the topping pattern, but I didn't trust it. So this swing has worked out pretty nicely if anybody's short dollar CAD. I know a lot of traders that got in trouble. I was long dollar CAD in here. A lot of traders are getting beat up short. And fortunately, if they held on to it, which that's the scary part, is some did, some didn't. But it did come back and rebalance. So I'll wait for another good trade. Dollar Swiss down to some fresh lows. I'm looking at some oversold conditions. Again, inefficiencies, yes. Pockets, yes, but no sign of a bottom yet. Probably the safest trade would be right here. If and when we break that trend line, give the market a chance to bottom. That's a straight down move. I don't want to call that. That's a falling knife. So if we can structurally set in some lows, we can go down a little bit more, set up a bottoming pattern, and then start to rip on the right-hand side of this trend line. We can come all the way back up here with some type of 3 to 5 wave move back to 92. But I've got to see something. I've got to see better evidence of a bottom. And right now we're just trading in like bizarro world. Gold is up, bonds are down, stocks are down, Mag 7 sucks, Trump won't stop talking, Fed's going to cut rates, but they won't yet. Markets are pricing in very bad things. We have like 8 weeks of straight bearish sentiment. We have like just extremes and concern all over the place, and for good reason. Like nobody knows what the hell's going to happen. So even last week, like another print, we've had I think 8 or 9 weeks consecutive above a 50% bearish trend on this sentiment survey. So nobody's optimistic right now. And that's also why I'm watching to see, like, however this price action plays out. I do think there is a contrarian play in there somewhere, but it's not without having all sorts of legitimate worry. So back to what I said in the very beginning, this low to this high, a lot of noise can happen in here without really giving the market any sense of direction. So you survive in here. We have opportunities to buy low, right? I have opportunities to re-hedge. So if we come back up to like 55 or come back up to 57, this area, I will be looking to apply some shorts again. If those shorts that I applied last week in my Crash Insurance Masterclass work out to get back to these lows, great. We'll make some money on the downside. Until then, this is noise. I'll look to get long in here. I think the market can hold. I don't think the Fed is going to do anything like cutting rates in May. I think they'd be silly if they did, because all they're going to do is mess this up. Okay. So everything that Trump is saying about how good things are, it's complete baloney, because this is Liberation Day US 10-year when they're talking about, look at what we're doing, right? The market is down, but we got yields lower, inflation is down, blah, 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 right? They're basically forcing, prices that reflect a recession. And yet the bond market is doing the exact opposite. Yields are up, ladies and gentlemen. This is not good. Okay. And my concern is that these don't go back down. My concern is that these drift higher, 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 higher. And it's going to be like it's going to break a 40-year trend, and this is where we have like, the Trump put / the Fed put / what this big liquidity air pocket is. Like all these things could get way, way, way worse. So this is why I put up here, 5% in the 10 years, something will break. Bond market's already starting to show signs of strain, possibly breaking, and then a major risk off event. I mean, we're already in the middle of one right now. It just gets accelerated, exacerbated. So I hope that's not the case. I hope that yields do cooperate a little bit, because if they don't, this isn't going to be fun for anybody until something does break and something does crash, and then things will improve. But still, it's going to be survive. Don't do anything silly. I keep saying that. That's probably the best mantra for 2025. And I'll be here every step of the way trying to figure out with you. Okay. All right. Thanks, everybody. I will see you tomorrow. All right. Take care. Bye.